Dear viewers, welcome to our channel GVS Bank Academy. Today I am going to discuss about Principles and Practice of Banking, JAIIB exam dated 15th May 2023, recalled questions. These purely banking related principles and practices of banking. These questions are also useful for JAIIB, CAIIB and also very useful to promotional examinations also. Promotional exam. Presently, we are also conducting classes for promotion examinations. Canara Bank, Central Bank, PNB, Bank of Baroda and Union Bank of India. Interested members are requested to contact for the online classes of promotion. Question number 1. Indian Contract Act 1872, Section 124, Contract of Indemnity. All insurance contracts are contract of indemnity. A contract, one party is promising to save the other from the loss caused by him by the conduct of the promisor himself or by the conduct of any other person, is a contract of. When banks are taking contract of indemnity bond at the time of payment of death claim settlements, at the time of issue of duplicate demand drafts, at the time of issue of duplicate deposit receipts also, bankers are insisting contract of indemnity bond. This is question number 2, Kisan credit card. How we are fixing limits for a first time? Kisan credit card, KCC, first year limit fixation how? Scale of finance per acre as decided by district level technical committee. Scale of finance as decided by district level technical committee into land cultivated, number of acres cultivated, plus 10% of the limits towards post-harvest household consumption requirements. What is the amount in scale of finance per acre into number of acres plus 10% of limit towards post-harvest household consumption requirements plus 20% limit towards repairs, maintenance expense of farm assets, 20% limit towards maintenance, farm repairs, farm assets, and crop insurance, fasal insurance, asset insurance also we can add. So, scale of finance as decided by district level technical committee into land cultivated plus 10% of limit towards post-harvest household consumption plus 20% limit towards repairs, maintenance. This. Question number 3, certificate of deposit. Certificate of deposit issued by banks, financial institutions. Now, what is the face value? 5 lakhs in multiples of 5 lakhs. Minimum 7 days. Banks issuance of certificate minimum 7 days, maximum up to or less than 1 year. And buyback after 7 days from the date of issue. The bank want to buy back from the secondary market, it can buy back 7 days. Certificate of deposit, it is a money market instrument. Question number 3. Question number 4, white label ATM operated by non-banking financial companies with net worth of 100 crores. And at white label ATM, cash deposit is not allowed. They cannot extend this service to the customers. Cash deposit facility is not available at white label ATMs. Question number 4. Question number 5, Negotiable Instrument Act, Section 131. Collecting banker protection. What are the duties of collecting banker to get protection? Duties: good faith, without negligence, crossed check, agent for collection. This is the section 130. 6, inside trading penalty. SEBI guidelines. Inside trading ante based on the inside information, the staff members, the known persons are doing inside trading. What is the penalty? 3 times of the amount of profit derived because from that information 3 times of the profit derived or maximum 25 crores penalty plus imprisonment up to 10 years also. Inside trading penalty 3 times of the amount of profit derived or maximum 7. In the bill of exchange, rate of interest not mentioned, then they can charge at the rate of 18% per annum. Bill of exchange interest rate not mentioned, 18%, 7, 8. Attachment order means court, income tax, government dues. Section 26 of the Income Tax Act, it is issued by income tax authorities for recovery of government dues. Attachment order always for recovery of government dues, and in that order they have to mention the amount, must be mentioned clearly, how much amount. Even amount deposit after receipt of the order also liable for attachment. Joint account also we can attach. Before attachment order, attachment, banker having right to write off set of his dues. So attachment order, Section 226 of Income Tax Act, issued by authorities, tax for recovery of government dues. In that order, they must specifically mention the amount of attachment amount. Even amount deposit after receipt of the order also applicable. 8. 9. Co-lending by banks and registered NBFCs under priority sector. It is allowed, but minimum NBFC share shall be 20% of the loan. Out of total loan under this category, minimum share from NBFC 20, remaining bank. And master agreement between bank and NBFC and customer also. This is important. Question number 10, Basel III, capital conservation buffer. Capital conservation buffer, 2.5% of risk-weighted assets in the form of common equity tier 1 capital. All banks must create 2.5% of their risk-weighted assets in the already created as per Basel III. Capital conservation, CAIIB. 11. Indian Contract Act, Section 182. Agent and principal relationship definition. Indian Contract Act, Section 182, agent and principal. Banker is having with the customer agent, check collection. Banker is agent to customer is principal. Standing instruction, banker is agent to customer is principal. In the current system, RBI is principal, bank is agent. So, where they defined Section 182. Question number 12, Pradhan Mantri Fasal Bima Yojana. What type of risk not covered under Pradhan Mantri Fasal Bima Yojana? Risk losses, risk arising out of war, nuclear risk, malicious damage by the borrower, other preventable losses. The same question last year, Union Bank of India, 4 to 5 also they had given. Losses arising out of war, nuclear risk, malicious damage, self, other. Question number 12. Question number 13. Priority sectors target for scheduled commercial banks, 40% of ANBC, RRBs 75%, small finance banks also 75%. Priority sector target for scheduled commercial banks 40, RRBC small finance banks 70. Question number 14, SHG members, minimum 10 to 20 members, normally, generally. Remote to difficult areas, minimum 5 members. SHG members. Tarvata, what is the main eligibility criteria for getting loans by SHG ante? At least after formation of the group, they have to maintain books 6 months. As per the books of accounts, at least the SHG is there in existence for 6 months. That existence of books for 6 months. This is the main condition for availing loans. This is the question number 16. This is also working capital management. Again, working capital, fixed capital for a purchase of acquiring of fixed assets, land, building, plant, machinery, furniture, fixed capital, permanent capital, fixed capital. Working capital for purchase of current assets, stock, raw material, payment of wages, other day-to-day running expenditure के लिए banks are providing working capital. This is the question, 2 marks question. This is 2 marks question they are given, a problematic. So whatever the purchase of fixed assets, fixed capital, working capital, purchase of current assets, concept question. 17 NRI loan conditions. Yes, we can provide loan to NRI against their deposits with proper margin. Again, that amount is going to be credited to non-resident ordinary account, NRO. 18 NRE accounts. In this account, funds from abroad only, we can open savings, CD, time deposit. Time deposit minimum 1 year, maximum 10 years undali. Minimum 1, no maximum. No TDS on interest payment on NRE deposits. No monetary limit on loan amount. You can give any loan amount based on normal margin. And no cap on repatriation. Repatriation means transfer back to his accounts. Back. No cap on repatriation. This is about non-resident ordinary external. Funds from abroad, savings, CD, time deposit, minimum 1 year, maximum 10 years. 19th, non-resident ordinary accounts. Funds from local or abroad, we can open SB, see current account, time deposit to RD. Interest payment is subject to tax, TDS, income tax. Subject to TDS. How much funds from this account you can transfer? Maximum in a year, 1 million. 1 million means $10 lakh. 1 million means $10 lakh we can remit from this account to abroad. This is the question they are asked. 19, 20, very important for all exams. 20. Non-banking financial companies, microfinance institutions, Malagaon committee recommendations. It is the regulated by RBI. Presently, net owned funds 5 crores, 2025 7 crores, 2027 net fund funds requirement is 10 crores. Microfinance institution lending, family income of the borrower not exceeding 3 lakhs. Family income they have to see. No collateral. Loan not exceeding first dose loan 75, first cycle. Subsequent second loan onwards maximum 1,25,000. Minimum 50% of the amount for income generation. Loan amount 50% go to income generation. Repayment obligation. Monthly household income into 50% only towards the loan repayment obligation. Recovery timing 9 AM to 6 PM. How much interest cap is also there? Interest rate top 5 largest commercial banks by assets annadu. Top 5 largest by assets into 2.75. Average of top 5 largest commercial banks rate of interest on quarterly basis into 2.75 times. They can charge maximum. Qualify. The microfinance institution out of total loans by following the conditions, at least 75% of the total assets they have to give in this bucket. Minimum 75% of total assets. Then only it will be considered as a microfinance institution. Question number 21. This is also very important for all exams, particularly promotion examination. JAIIB also they are asking. Independent credit evaluations report required for resolution of stressed assets. 500 crores and about 2 required. Independent credit evaluation reports from independent rating agency. 500 crores and above 2. Less than 500 crores loan 1. ICE independent credit evaluation reports required 500 crores and above 2. Less than 500 1. What are the eligible resolution plans which receive credit opinion of RP4, RP1, RP2, RP3? RP means resolution plans eligible. The independent credit evaluation they have to give their rating in RP1, RP2, RP3, 4, RP7. But RP1 to 4 only eligible for resolution plan implementation. What is RP1? Lowest credit risk. Independent credit evaluation report, RP1 lowest credit risk, RP2 very low credit risk, RP2 very low credit risk, RP3 low credit risk, RP4 carry moderate credit. Sometimes they are asking RP1 lowest credit risk, RP2 very low credit risk, RP3 low credit, RP carry moderate credit. Primary functions of DRT. What purpose it was established? Recovery of loans from borrower payable to banks and financial institutions. Main object of DRT, recovery of loans of banks and financial institutions. So this is banks default. For referring the cases under DRT, minimum default amount is 20 lakhs and above, and each DRT is headed by one presiding officer. One presiding officer. This is question number 22. 20, 21 are very important. This is question number 23. Securitization, sale, transfer of standard assets. RBI Direction 2021. Minimum retention requirement before sale of standard. Retention ante they have to retain in their books. Original loan maturity less than or up to 24 months. Original loan, underlying loans. They want to sell, they want to transfer. Minimum retention requirement is 5% of the book value of the loans. Out of total loans less than or up to 24 months, they want to transfer. They have to retain in their books 5% of book value. Remaining they can transfer. That is called securitized standard assets. Where original maturity more than 24 months. They want to securitize the loan with more than 24 months. They have to, out of book value of total loans, 10% they have to retain in their books. And the remaining 90% they can securitization of standard assets. This is there. In case of residential mortgage, mortgage securities, backed securities, irrespective of maturity period, irrespective of original maturity, they can retain 5%. Three conditions are there. Where loans are less than 24 months, 5% of the book value they have to retain before securitization. Where more than 24 months, 10% of the book value of the asset they have to retain, minimum retention. Where the proposed assets is mortgage backed securities, irrespective of their maturity, they have to retain 5%. This is about securitization of standard assets, direction 20. 23. 24. As per Transfer of Property Act, transfer requires written and registered instruments. Registration is must. As per Transfer of Property Act, registration, mortgage property 100 rupees and above, sale deed 100 rupees and above, registration is must. Question number 25, operating cycle, working capital assessment, operating cycle. Conversion of cash into raw material into semi-finished goods into finished goods, and finished goods to credit sale to cash sale. This cycle is called as operating cycle. Normally in the working capital management, operating cycle is generally 3 months, 90 days, operating cycle. Cash to cash conversion, operating cycle. 26, this is the new concept, account aggregators. Account aggregators. These are one particular type of NBFC regulated with registration with RBI that helps an individual security, and digitally these institutions will share the customer information with other institutions. For that customer consent is required. These account aggregators are storing the customer information. With the consent of the customer, they are transferring, sharing this information to anyone with other regulated financial they can have. This is the account aggregator. Not a official valid document, PAN card. PAN card is not a officially valid document. Question number 28. Role of negotiating bank in letter of credit. Various parties are there in the letter of credit. Negotiating bank, which negotiate the bills. It will receive the document from the customer, exporter, beneficiary, presenting them to issuing bank or reimbursement bank for getting the payment. It will also negotiate the documents given by the exporter also. Receiving documents from the exporter, negotiating it, presenting them to the issuing bank at the importer's bank for making payment or for acceptance for reimbursement. This comes under letter of credit. Question number 29. Digital lending. As of today, it is one of the boosting subject. Digital lending involves lending through web platforms, lending through web, mobile apps, utilizing technology for authentication of loan, credit evaluation, processing also. Entire through technology, through mobile apps, web platforms. What is the main thing in the cooling off lookup period? Cooling off lookup period. What is cooling off lookup period? A borrower shall be given an explicit option to exit digital loan. Borrower ke liye they are giving one exit option to exit from the digital loan by paying the principal along with appropriate annual percentage of interest without any penalty during this cooling off period, lookup period. During this cooling off lookup period, borrower can pay the rate of interest and he can go out. That is there. The cooling off period shall be determined by the board of the bank, regulated entity. The period so determined so far shall not be less than 3 days for loans having tenor of 7 days. Loan tenor is 7 days or more. The cooling period is available to the borrower, lookup period 3 days. And 1 day for loans having less than 7 days, 1 day he can this after sanction. Cooling off lookup period. A borrower shall be given an explicit, clear option to exit to out digital loan by paying the principal amount plus appropriate percentage rate of interest without any penalty during this cooling off period, lookup period. The cooling off period shall be determined by the board of the bank. The period so determined shall not be less than 3 days for loans with tenor of 7 days or more, and less than 7 days, the cooling off lookup period is 1 day. Dear viewers, these are the 29 questions which are very useful for coming examination and also very useful for promotion examination also. Thank you very much for all.